I think Kathy and I have been talking by email for, gosh, it seems like a year and a half, 2 years now. And I'm so delighted to finally be able to join you guys. So today we're going to talk about taxes and how to set up a business and that sort of thing. Let me see if I can share my screen and we'll jump right into it. Okay, can everybody see that?
Yes.
All right.
And I'm watching for questions. If anybody has any questions, just put them in the chat.
Awesome. So tax and other business issues for authors is our topic, and we're going to go through this. So the first thing is my cover your butt slide. So I have to let everyone know that this is just general information. I am a tax attorney, but I'm not your tax attorney. So you're not my client. So I'm just giving helpful information, and hopefully it will spur some interest and you can do your own research. And if you have any questions, consult your own CPA or attorney. But please feel free to ask questions. I want to help as much as I can. And so even though I'm not your tax attorney, please feel free to ask questions. All right, so I am a senior tax counsel, which is just a fancy way of saying I'm a tax geek. And so I look the part, right? So I dressed in my normal attire today. I am a tax geek. I've done it for, I guess, 24 years, 22 with my current employer. And so I love taxes. So I get to talk about my favorite two topics today, which is taxes and authorship, and I love that. So this is kind of interesting for me. I'm also an adjunct faculty at Lone Star College. I've done that since 2001. I have taught a corporate and partnership income tax class. I did that for a little bit, and I've also taught business law, which is normally what I teach. After I taught tax a few times, I told them I enjoyed it, but it felt more like working overtime because it's a 3-hour night class. You know, after working, doing taxes all day long, I had to go to college and spend 3 more hours talking about tax. So I asked them if I could just teach business law, and they said, okay. And that's what I've been doing ever since. I just love business law. It's exciting to me. And it's a little bit different than my daily chores because we talk about businesses and contracts and all, stuff that I don't always see in my day practice. I'm also an author. I've written 4 nonfiction books, and I give these speeches about topics, various topics. So that's a little bit about me. Let's jump into the topics. So the first one we're going to talk about today is, do you really need an author business? And I'll tell you, it's not for everybody, but I do think a lot of authors would benefit by setting up a business. And we'll talk more about that in a second. The second topic is whether you have a hobby versus a business. And that's important for IRS purposes. And we'll talk more about that a little later. Then we'll jump into the different business entity types. So whether you want to set up a sole proprietorship or an LLC or a C Corp or an S Corp, we'll talk about those things. There's other types of businesses as well. Everyone's probably familiar with a partnership, but those are like, usually 2 or more members. And I'm going to just, to keep it simple, I'm going to stick to single member businesses like the ones I just mentioned. So we're going to go through the various types and talk about the differences. And then later we're going to get into typical author income and expenses and how you should record those things. And then lastly, we're going to talk about the ever exciting IRS tax forms. So I know everyone's favorite topic there. And so hopefully nobody's asleep by that point, right? But this is a good time of the year to be talking about stuff like this because our taxes are due in a few months, and it's always a good thing to revisit, I think. If you have any questions, please put them in the chat bar, and I think Kathy's going to help relay those to the group and to me. And well, I'll be happy to answer anything and everything, but I'm going to tell you up front, I don't know everything. I know I look the part. I'm like very geekish, and my wife will agree with that. But my wife will also tell you I do not know everything. So my focus is corporate tax, and that's really what I do on a day in and day out basis. I know a little bit about individual taxes as an author because I've been an author for 4 years or so, but I don't know everything. I'm not a sales tax expert, but we'll talk a little bit about sales tax. I'm not a state income or franchise tax expert. I don't do that in my day practice, but we'll talk a little bit about those requirements. So there are other types of taxes that I'm going to try to mention today, but just be aware I'm not an expert in all these fields. I wish I was, but anyway, so with that said, let's jump into it. First question is, do you really need an author business or not? To be an author business or not to be is the question. So there are benefits, like everything, there's pros and cons. And if you have an author business, you can kind of set up a unique brand, which is important, I think, to try to stand out in the field of what there's millions of authors on Amazon, for example. And if you want to stand out a little bit, one way to do that is to set up your own business. For example, the one I have is Lecture Pro Publishing. That's the sole proprietorship that I created about 4.5 years ago. And we'll talk more about sole proprietorships later. But that was my brand name. And I will tell you, if you haven't created a brand name, it is much tougher than it sounds like. Because you know, I thought of a million creative, awesome names for my publishing business, and I could not find one that was unique until I stumbled upon Lecture Pro Publishing, which I'll tell you is kind of lame. It's not the most exciting name. I had a bunch of really cool names, but it seemed like they were already taken. So you have to find something that's unique. Otherwise, you'll infringe on someone else's trade name, and you don't want to do that. So anyway, that's a benefit. You can establish your brand. Another benefit is privacy. So it's 2021. Nobody wants to give out their social security number if you don't have to. And one of the things about setting up an account, for example, if you self-publish and you self-publish your books through KDP, Kindle Direct Publishing on Amazon, you're going to have to give them a taxpayer ID number that they need that so that they can pay you your royalties. And to do that, you have a choice. You can give them your social security number, or if you set up a business, even if it's a sole proprietorship, you can give them a federal EIN number, employer identification number, which is essentially like a social security number for a business. And that way, if you give them the federal EIN number, you can kind of protect your own social security number, if you will. So that's a good thing. And then last is you can maximize income tax deductions. So any questions about that so far?
I don't know if these are specific to that, but I do have 2 questions for you.
Sure, what you got?
Okay, the first one is from Suzanne. She says, I have a sole proprietorship for my freelance copywriting and feature writing business. Will my author expenses and hopefully someday income be covered with that, or do I need a separate one?
Okay, so it sounds like the question is she has 2 different businesses and she's trying to figure out if she can use the one sole proprietorship that she already set up for both businesses.
Got me. Suzanne, can you, why don't you unmute your,
I've been writing. I have one published, but there's been no income from it yet. But do I need, like, the name of the company is Fresh Ink, INK, and I've just kind of been throwing everything under that. So do I need to break it out even though I don't have any income yet? I just have expenses.
So if the other, are you saying you set up that original sole proprietorship for that first book that's not making income, and now you're going to have a second book and you're trying to figure out whether you need another?
No. I just have the sole proprietorship for my freelance copywriting business.
Oh, okay. And copywriting business, forgive me, but I'm not familiar.
I write websites, brochures, marketing material, advertorials, features for magazines.
It's similar enough that you could probably get away with using the same one. That would be the easiest thing, obviously.
Yeah.
And I would probably do that. I like to keep things simple. If you really wanted to get fancy and you were worried about keeping records of the 2 different businesses, you certainly could set up another sole proprietorship. I think either way is fine. If you had told me that your other business was making, you know, tacos and you have a taco truck, it has nothing to do with writing a book, I would say, yeah, you definitely need another one. But it really, I think it's your call.
It's all writing, so, okay.
Okay, next to Millie Hast. Does the brand name have to be unique only in your state or nationally?
So I think the safest thing, it's kind of like how risk averse are you? Do you get real nervous? Are you worried about lawsuits and you can't sleep at night? If you're really worried, the safest thing is if there's another name in another state that's exactly the same as yours or similar, the safest thing is don't use it. Come up with something different. If you pick another name that's used in another state and it's not used in your state, you're kind of asking for trouble. Particularly if you get to be big and your name is popular and you have a lot of sales and you start advertising and you sort of tick off the other person. But again, it's kind of your call. You know, technically, I think if someone else is using it in another state, you're probably not supposed to use the same name because you're just kind of inviting trouble. Does that make
And-
sense?
And last but not least, can you apply for an EIN from the IRS without telling the state of Texas?
The answer is yes. Well, it depends on when you say without telling Texas. If you need a sales tax certificate, which we'll talk about later, they may ask for that. I'm not sure what you mean by telling the state of Texas. Generally speaking, if you don't need a sales tax certificate because you're not going to charge sales tax, you're not going to sell books in person, that sort of thing. I'm not sure. And you have a sole proprietorship, so you're not filling out the Texas franchise tax return. In that situation, you don't have to tell them. I haven't given them my federal EIN number. I can't remember any reason why I would have. So hopefully that answers the question. If not, please come back and ask again. These are all great questions, by the way, and we're going to get into a lot of this stuff as we go through this, but you guys are already asking really good questions. So I like to hear that. Keep them coming.
Okay, you keep going.
All right. All right. Very good. So now let's talk quickly about, do you need an author business? And for most authors, I would say probably so, but it's really up to the individual author. So here's a couple of situations where you probably don't need an author business. The first is if you're only going to write your memoirs. Now I give a lot of these speeches on self-publishing. I wrote a book about self-publishing, and I give a lot of speeches at the local community college, Lone Star College, to folks 50 and over as part of their, it's Academy for Lifelong Learning. So I give several speeches a year to different writer groups that are 50 and over, mostly retired. And a lot of folks come there and their goal is to write their memoir, and they want to be able to pass out some, books to the family. And that's fine. There's nothing wrong with that goal at all. But for those folks, I really don't see the benefit of, establishing an author business. If that's all you really want to do is to leave a legacy and write this one little book, hand it out to families and friends, you're not really worried about profits and selling a ton of books, and you don't want to build a readership, I honestly don't think you need a author business. That's just my own personal opinion. And then secondly, if you are only going to write one book, no matter what it is, and it's just for fun, really, it's just a fun project. You're not worried about sales or profits. It's more of a hobby. Again, probably don't need an author business. So those are the two situations where I can think of off the top of my head where you can probably skip this idea of creating an author business. But for the most part, there are benefits that we just went over. And I think a lot of other writers who plan to write, especially if you're going to write more than one book, it makes a lot of sense to create an author business. And it doesn't have to be a fancy schmancy C Corp. We're going to talk about the different entities in a minute. It can be a simple sole proprietorship, for example, and it's really easy and not very expensive at all. So let's just keep going here unless anybody else has any questions. The next topic is hobby versus business. And this is very important in the eyes of the IRS. I love this quote: without customers, you don't have a business, you have a hobby. So that's exactly right. And so hopefully if your goal is to sell a lot of books and build a big readership, then you want to have a business, and that's going to apply to a lot of writers. So what does the IRS view? How do they look at these things, whether you're a hobbyist versus a business? The number one thing they look at is your profit motive. Okay. And there's different things that can indicate that. But they also look at a history of profits if you have any. So what does it mean to be a profit motive? Well, you got to show something that you invest a lot of time and money into this business, just like you would a business. It's not something you do, sporadically or whenever you just happen to have free time, right? You're treating it like a serious enterprise, like a business, like you want to make money. So you're going to spend time writing the books or whatever it is that you're writing, and you're marketing them, you're advertising, you're doing whatever it takes to promote the business. That's important. You run it like a business. You're going to have spreadsheets and keep track of records, hopefully. Even if it's Excel spreadsheet, that's fine. Maybe you do some advertising. You do not commingle. In other words, you set up a separate bank account for the business. We'll talk more about that in a few minutes. So you basically just want to treat it like a business, and that is important. Now let's talk about this IRS test that they have, and they look at profit history. So the IRS has what they call a safe harbor test. And what that simply means is it is presumed that you have a business if it made a profit in the last any three of the last 5 years. So that is a helpful thing. If you're trying to be a business, you can rely on your profit history. Now, the opposite is not true. So if you have not made a profit in at least 3 of the last 5 years, there is no presumption that you have a hobby. Okay. So this safe harbor test is truly that. It allows you to safely assume that you're going to be treated as a business if you meet the test. If you don't meet the test, it doesn't mean the opposite. Okay. Any questions about that so far? All right. Good. So let's talk more about the hobby treatment. What does it mean if the IRS thinks you have a hobby? Well, first and foremost, you're going to have to report it in the right place. So on your individual annual tax return, Form 1040, everybody's familiar with it, you're going to put it under other income. And as far as deductions go, thanks to the Tax Cuts and Jobs Act, which has been in effect for, I guess, 3 years now, when it came out, they got rid of the miscellaneous itemized deductions. And that was where you could deduct all your hobby expenses up to a certain point. Well, they got rid of that. And so now you're no longer allowed to deduct any of your hobby expenses like advertising, supplies, office supplies, things like that. Those are gone. If you have a hobby, you do not deduct any of those now after the Tax Cuts and Jobs Act. You can still deduct what they call cost of goods sold, and that's essentially your expenses that are directly tied to the production of your goods or services. So for example, if you're writing books and you're printing them out and let's say you spend $10 to print out each book. Let's say you only sell one book and you printed one book. It cost you $10 to print it. You sold it for $15. You can deduct the $10 cost to print that book against the $15 of income, and you're going to have a $5 of income. You cannot deduct all your other expenses that are not directly tied to that book production. So as I said before, advertising or office supplies, things like that, you cannot deduct those if it's a hobby. Okay, and that's bad, right? If you want to make the most of your deductions, you want a business, not a hobby. So what if you lose money? If you have a hobby, hobby expenses in excess of hobby income is not allowed. And that's true even before Tax Cuts and Jobs Act. But it's really worse now because you can't deduct your general expenses except for cost of goods sold, as we just said. So your hobby expenses in excess of your income is not allowed if it's a hobby. On the other hand, if you have a business, your business expenses that exceed your royalty income from your books, for example, is allowed. So even if you have a bad year, you spent way too much producing your next book, didn't get many sales, you have a lot of expenses this year that exceed your royalty income, the good news is you have a tax deduction that you can take on your tax return. So that's the main benefit right there for a business. Any questions at all about hobby versus a business? Pretty straightforward, I think. Okay, so now we're going to talk about the business entities. Let's assume that you've listened to my little spiel. And before I forget, if anybody has any questions about taxes and setting up an entity or any of these topics that we're talking about today, feel free to email me. But there's this really informative book that I highly recommend. I read it like 2 years ago before I made all these slides, and I've referred to it from time to time. And it's called Business Tips and Taxes for Writers. And it's written by a person named Carol Topp. She's a CPA. Carol Topp, T-O-P-P. Again, it's Business Tips and Taxes for Writers. It's a very informative book. And so I highly recommend that resource. All right. So with that said, now we're going to talk about the different business entities. And this comes right out of my business law class. So I teach at Lone Star College 1 night a week. I've done it for many years. And I teach my students all the different business entities that we're about to go through. And I explain all these differences. And so hopefully this same topic I'm going to share with you guys today. Let's see. I love this quote from Ted Turner. My son is now an entrepreneur. That's what you're called when you don't have a job, right? So anyway, that kind of sums it up nicely. Now, there's 4 factors to consider when you're trying to pick your business entity. And again, we're going to talk about sole proprietorships, which is the easiest one to create. We're going to talk about LLCs, S Corp, and C Corp. And those are all, at least in Texas, those can be single member owner businesses. There's other types of entities as well, but those are the ones I'm going to focus on today. But when you're trying to figure out which one to set up for your author business, I like to think of these 4 topics right here. The first one is the liability that you can incur as an owner. Some of these businesses provide limited liability, like an LLC or C Corp or an S Corp. And then some do not have that feature, like sole proprietorship. Also, ease of creation. A sole proprietorship is going to be the easiest to create. Others require more paperwork and maybe are more costly. The next is a need for capital or money. So if you need to raise a bunch of money and you're a one-man show or one-woman show, you're going to have to think about that. Hey, how am I going to get this money? And most of these are single member entities. But if you had, like, for example, a partnership, you could tap into the other co-owner for whatever money they might be able to have or loans if they need loans. So you think about whether it's sole single person owner versus more multiple owners. And then last is the tax treatment, my favorite topic. And so some of these entities we're going to talk about are treated as, they're subject to single tax, which is good. And some, like a C Corp, are subject to double tax. So that would be bad. Obviously, you're paying more tax. So those are the main factors. This is sort of a little cheat sheet, if you will, kind of lays out the differences between the 4 entities that we're about to go into and talk about in more details. But you see the first one, sole proprietorship, that one has unlimited liability. It's in red because it's bad. You don't want unlimited liability. That basically means if you're a sole proprietorship and you sign a loan for $100,000 with the bank and you don't pay back the loan, they can take your stuff, right? They can go get your stuff. Now there's homestead laws in every state, and you're generally allowed to keep certain things from creditors, like, one house up to 20 acres or whatever it is in Texas now. Different states have different rules on what you can keep. You can keep 1 car. If you have a truck that you use for a business, like a tool truck or a taco truck or whatever, you might be able to keep that in your tools and equipment. But if you have an extra vehicle, you have another summer home, things like that, or a boat that you don't use for a business, things like that are subject to potentially being seized by your creditors. So unlimited liability is scary for some people. And so maybe you want to shy away from sole proprietorship, or maybe you don't really worry too much like myself, because I don't sign big contracts with anyone. So, I might be out, I don't know, $1,500 on an editor or something like that. And I'm pretty sure I'm going to pay them. So I'm not worried about being sued. So, based on the size of my transactions with my own author business, me personally, I'm comfortable using a sole proprietorship, but it may not be for everybody. Okay. And then again, we're going to talk more about what does it take to create these entities and that sort of thing in a minute. Just be aware that limited liability LLCs is what we call them. S Corp and C Corp, they have limited liability. So the law protects you in the case of an LLC that wrote a $100,000 loan to somebody, a bank. If the LLC doesn't pay back the loan, then the bank can still sue the LLC, but essentially they're going to be limited as to what they can recover. Whatever assets you put into the LLC, that's really all they can take. They can't take the owner's personal assets. So that's really the benefit of limited liability. Any questions so far? You guys are awful quiet. I'll make sure nobody's asleep over there. Okay.
One just came in.
Good. What you got?
One of the reasons I wanted to start an LLC was to protect my husband's income. Is that a correct assumption that would happen?
When you say protect the husband's income, I'm not sure I follow. Like, how so?
Well, since it was for me, I'll go ahead and tell you. He makes money. I don't make as much. If for some reason I got sued, would I started an LLC so that they couldn't go after his income?
Well, I usually think of assets as something that the creditors could take or seize more
Oh, I
than
see.
income. Does that make
So
sense?
wait, so they could still take my house?
Except for the Texas homestead laws. But if you have like an extra house or something like that, there are certain things outside of the protection of your state homestead laws.
Yeah, he doesn't make that much money. We're good.
Okay, okay. So there you go. Yeah, but that's like well, just a little fun fact. O.J. Simpson, when he moved to Florida, it's because they had stronger homestead laws after he lost the civil lawsuit, against the victims. So, so yeah, Texas has pretty strong homestead laws. Actually, I think you're allowed to keep one house and up to 20 acres, and some of the things we talked about earlier, you can keep, protected from creditors for the most part. Now, there's exceptions and there's different things, and I'm not going to pretend to be a bankruptcy lawyer. I'm not, but generally speaking, it depends on how many assets you have, and I don't really worry about income per se. I don't really think they're going to seize your future income. That's not normal anyway. Does that make sense?
Yes, sir.
Okay, great. So, all right, with that said, let's jump into these particular entities. We're going to talk about each one and how to set them up and the differences. And a little fun fact here at the bottom, some states require more than one owner if you're creating an LLC. Texas does not. A single owner LLC is perfectly fine in Texas. So if you want to do an LLC, you don't need another person in Texas. And also, by the way, if you want to create an LLC or a C Corp, an S Corp, it doesn't have to be in the state you live in. You can pick another state. A lot of people will pick Delaware to create a C Corp or an LLC or anything else because there's a lot of pro-business laws in that particular state. And depending on the contracts you sign and whatnot, if you're sued, it may be helpful if you're set up in Delaware, but that's not the only place to set up. A lot of people set up LLCs and C Corps in Texas. I will tell you that I used to be a young lawyer many years ago in Amarillo, and we'd set up these small mom and pop companies. It could be a tattoo parlor, a car dealership, or whatever. We would set up a new C Corp for them, or it could be an LLC or whatever. And we picked Nevada. Any guesses why we would establish a Nevada, C corporation instead of Texas? Anybody have any guesses? What's in Nevada? Why do people go to Nevada? Come on, y'all know this.
Gambling.
Yeah, Vegas. And so you got to have your annual, board of directors meetings, right? Why not do them in Vegas and write it off? It's a beautiful scam. I mean, it's a beautiful plan. I'm sorry. So anyway, so you can set these things up anywhere. It doesn't have to be in your home state. And so just be aware of that. Now, the next thing we're talking about is owner liability. We've already talked about it a little bit. And I mentioned that sole proprietorships have unlimited liability, which is bad. And then the other entities that we talked about have limited liability. However, even if you pick an LLC, C Corp, or an S Corp, which have limited liability normally, there is an exception. Sometimes the court, if there's a lawsuit and the creditor sues you, and you have an LLC or C Corp or an S Corp, they will do what's called piercing the corporate veil. And what that means is the court can ignore the fact that you created a C Corp or an LLC or an S Corp, and they will treat it like a sole proprietorship. In other words, you can have unlimited liability even though you set up a C Corp or an LLC or an S Corp. So you just want to make sure you don't fall under one of these four things here that you see on the screen on the slide. You don't want to mislead somebody into dealing with the business when they're really dealing with you. If you have a business that's basically a sham, it's on paper, but you're not really operating a business. It's too thinly capitalized. You didn't put enough money in it. These are all things that, you don't follow corporate formalities. You commingle your funds and the business funds, so you don't really treat it like a business. These are all no-nos, okay? And the court can ignore the fact that you have an LLC. So as long as you follow the rules, you can not worry about this piercing the corporate veil stuff. If you don't follow the rules, you may not have limited liability. That's the bottom line. Any questions about this topic? All right. So next we're going to talk about the individual entities. This is a very popular one. It's not for everybody. It happens to be the one that I chose, and it's a sole proprietorship. Very easy. It's cheap and easy, and I'm all about cheap and easy. Ask my wife, she'll say I'm very cheap, I'm very easy, okay? So I like sole proprietorships. They have the only negative is there unlimited liability. And so that's the negative. We've already mentioned it, but it is cheap and easy to set it up and operate it. And so need for capital, that just means the only money you're going to be able to have access to is whatever's in your, whatever assets you have plus whatever credit you can get. But that's going to be true of all these entities we're talking about today. And then the real benefit, another benefit, is single income tax, meaning some of these entities like a C Corp have double income tax, meaning it's taxed once at the C Corp level. And then again, if you distribute the income to the shareholders as a dividend, it'll be taxed again at the shareholder level. That's double tax. That's bad. Sole proprietorship, along with some of the others, are only subject to single income tax. So it's taxed one time at the owner level, not at the business level. So that's a good thing. Now, yeah, just a couple of little things you want to be aware of. If you do set up a sole proprietorship, just be aware that whenever the owner dies, the business dies. So let's say you have a sole proprietorship and you have a hot dog stand. If you have a hot dog stand and you have your own recipe and your own business name, whatever, and let's say that you, I don't know, you want to retire. If you you gift the business to your son or daughter, and they run the exact same hot dog stand with the same name, same recipe, everything's the same, it's just a new owner. Technically, they have not taken over your sole proprietorship. They have created a new sole proprietorship, and yours has ceased to operate. And so it's just because the business and the owner are treated as the same thing, legally speaking. So just be aware of that. If you want a business that is legally the same business and it continues forever, a sole proprietorship is not the way to go. You probably want like a C Corp or something like that, because even if the owners change, the C Corp lives on. So anyway, the owner is the manager, and you're not subject to Texas state franchise tax filings. So that's another thing about, again, cheap and easy, right? Sole proprietorships don't have to do the annual filing for the state franchise and margins tax. So it just makes it real clean and simple. That's what I love about sole proprietorships. Now, how do you create a sole proprietorship? This is very, very easy. And this just take a second to explain. Basically, you're going to pick a unique name. As we talked about earlier, you don't want to infringe on another business's trade name. That could result in a lawsuit. So how do you find out if the name you've created is unique? Obviously, you can Google it, or you can go to the U.S. Patent and Trademark Office website, uspto.gov. That's a great place. There's a free search engine there where you can search for business names. And then you can also check with the Texas Secretary of State or whatever Secretary of State at the state where you want to, live or where you want to create the business. So these are all options to find a unique name. So you probably want to search, a couple of these, just make sure that no one else is using that name. Once you have a unique name, you can go to your local county clerk's office. And I live in Montgomery County, which is just outside of Houston, north of Houston. And you file in your local county a doing business as form, DBA, also called an assumed name certificate. And it's very cheap and easy. When I did this about 4.5 years ago, the fee was like $8.50. It was nothing. So it's a one-page form, super easy to fill out. You're going to put in the owner's name and address and the name and address of the business. And that's where you're going to use this unique name. For me, it was Lecture Pro Publishing. And then I used my home address. If you want privacy, you can go get a PO box at the local post office. I just didn't want to, spend the money, but you can do that if you want to get a PO box for your business. You fill out the form, and they're going to file stamp it and give you a copy. And after that, I recommend going to the irs.gov website and apply for a federal EIN number. Just like I mentioned earlier, it's a taxpayer ID number for a business, including a sole proprietorship. You don't have to hire anybody, okay? Employer identification number is simply a tax ID number. That's all it is, taxpayer ID number for a business. It doesn't necessarily mean that you're going to hire somebody. It's free. It's very easy. It takes like less than 30 minutes online. You can get it right away. And then the last step is you go down to your local bank. I recommend shopping around because I went to where I do my personal business, and I didn't like the terms. I think at the time I had to have like $2,500 minimum at all times to avoid fees. And there was limited check writing, only a certain number of transactions per month, or there were fees. I ended up going down the street to Chase, and I liked their business checking account better. I think it was like $1,500 minimum to avoid the fees, unlimited check writing, et cetera, et cetera. So I've used Chase for my business, and I've been very happy with it. So anyway, you open the checking account in the name of the business, and you give them your federal EIN number for that business. And pretty much after that, you're up and running. You just want to keep records, right? Keep the money separate. Don't use your business checking account for personal expenses, and vice versa. Don't use, your personal checking account to pay for your business. Now, if it happens once or twice in a year, don't worry about it. It's not a big deal. You just don't want to make a habit of it, because then it looks like you're treating it like a hobby, right? And so it's important to treat these things separately, a business and your personal banking account. Keep those things separate, and you're pretty much off and running. It's pretty simple. In some states outside of Texas, you might have to put a public notice in a paper for 4 weeks or something like that, but that's not necessary in Texas. Any questions about how to create a sole proprietorship? It's pretty simple.
No, none.
All right, good. So now we're talking about an LLC. This is another popular choice of business entity, and a little quirky thing about LLCs. For IRS purposes only, not legal purposes, but just for IRS purposes, there is no specific tax laws that treat an entity as an LLC. The IRS will look at an LLC and they'll treat it as either a sole proprietorship if it's a single owner. Fun fact, it could be a partnership if it's dual owner or more. But anyway, it could treat it as a C Corp or an S Corp. So it's kind of like a chameleon. An LLC is going to be one of these other entities for IRS purposes only. So just be aware of that. And so we're talking about the Lent characteristics: liability, ease of creation, need for capital, and taxation. LLCs have limited liability. So that's a big improvement over the sole proprietorship. So that's going to give you the limited liability that we talked about. And that's a good thing, unless the court pierces the corporate veil, like we talked about earlier. Again, follow the rules and you're going to have limited liability. You don't have to worry about piercing the corporate veil. It's a little bit more complicated and expensive to create. You're basically going to have to fill out a form with the Secretary of State to create an LLC. It's not very hard. In fact, my students do it every semester at Lone Star. I assign my students to do, it's like a 3-page form on the Texas Secretary of State website. They fill it out and turn it into me, and they cut the check to me. That's a joke, people. I don't make them cut me. I only accept cash, right? I'm not stupid, right? So anyway, yeah, and they say teaching doesn't pay. Come on. So anyway, yeah, so it's really simple to figure this stuff out. Anyone can do it. You don't need a lawyer. It's really not that hard to create an LLC. You're going to go to the IRS website, you download the 3-page form, you fill it out, and you turn it in, you pay the fee. I think it's like $300 last time I checked. So it's very doable. Need for capital, like I said, they're pretty much all the same here because you're going to have one owner. And then it has single income tax. So that's a good thing. That's a good thing about LLCs. Other characteristics, it's you can set it up as member managed versus manager managed. All that means is if it's member managed, the owner or owners, we call them members, they're going to manage it. If it's manager managed, well, that's a mouthful. That simply means that you picked somebody to run it. It could be an owner or it could be somebody who's not an owner. That's the difference. Not a big deal. And then last is be aware that if you have an LLC, you do have to file your Texas state franchise tax filings. It's an annual filing, but you don't have to pay any state franchise or margins tax unless the revenues exceed, I think it's 1.1 million. So just be aware, even if you don't owe any state franchise or margins tax, you still have to fill out the annual form. And if not, there's penalties. I think it's $50 or something like that, but just be aware of that. If you do a sole proprietorship, you don't have to worry about filing this this annual filing every year with Texas. So how do you create an LLC? It's going to look remarkably similar to the steps of doing the how do you create a sole proprietorship. You're going to do the same thing. You're going to pick a state wherever you want to create it and a unique name. and you're going to file the documents. The typical name is articles of organization, but every state has a different name. Texas, they don't call it articles of organization. There's some other fancy term, but basically just look online. I think it's Form 205 or something like that. But you're just going to the Texas Secretary of State website, look in the forms, business forms, and you'll find it. It's pretty self-explanatory. You'll fill out the form that's to create an LLC. You can, if you had 2+ owners, also do what's called an operating agreement. It's kind of like a partnership agreement, but you don't need that here if you're a single member LLC. And you're going to do the federal EIN number, like I said earlier, and open a checking account. So it's very, very similar. It's just that you got to fill out this little bit longer form and pay the filing fee, which is like $300 versus $8.50 at my local county courthouse for a sole proprietorship. Any questions about LLCs? All right, hopefully everybody's still awake. We're going to talk about C Corps now. Now, in this book that I mentioned earlier, they make it's business tips and taxes for writers. I like what she says about C Corps. C Corps are usually more fancy schmancy. They require, picking board of directors and officers and all that. And that probably makes sense because, and there's different tax forms versus an LLC or sole proprietorship. But it usually doesn't make sense to go through the hassle and the expense of setting up a C Corp and keeping up with the accounting and all that, unless you make like 50 grand or more. So if you're an author and you're making 50 grand or more from your book sales and speeches, etc., congratulations. I'm not there yet, but I hope to be there sometime soon. But if that is you, then you might want to consider a C Corp. But we'll go through this just in case, right? For the lint factors, basically, you're going to have limited liability, which is great. It is a little more complicated and expensive to create and operate. And this is the bad part of C Corp at the bottom. Double tax. Double tax is bad. So I work at a large utility company in East Texas, and then we're in other states. And we have 85 people in our tax department. And why do we have so many people? It's because we pay a lot of taxes. And specifically, we pay double tax because, like I said, if we have $100 of net income at the end of the year, we're going to pay tax at the corporate level. And then if we issue a dividend to shareholders, the shareholders pay tax. So that same income is going to get dinged twice. Okay. So just be aware that that is a big negative for C Corps versus the other entities. Oh, and here's an actual example, not an actual example, a hypothetical example. If you are at some kind of like federal income tax rate of 25% for the individuals, then, if it's a single tax entity like a sole proprietorship or an LLC treated like a sole proprietorship, then you're going to only pay tax one time at the owner's level. You would end up with $75 after you pay your tax. If you're a C corporation subject to double tax, then you would start out with $100. Then you're going to pay, let's say you're at the highest federal level, which is 21% federal. Let's say that you pay 1%. And I think in Texas, the margins rate is around 0.75. So just a little less than 1%. So let's say it's 22% total state and federal income tax rate for Texas, let's say. Then you're going to pay $22 of tax at the corporate level if you're a C Corp. What's left over? $78, but you're not done yet. If you issue a dividend of $78 to the owners, they're going to pay income tax on that $78. After tax, what do you have left over? $58. Okay, that's a big difference between $75 if you had created a single what they call a pass-through entity, which is anything subject to single tax, like a sole proprietorship or an LLC or an S Corp. So that's sort of real world what it looks like, the difference here. And it makes a lot of sense to avoid C Corps for this very reason right here. Any questions about this stuff? I know it's pretty dry stuff, right? Okay, other characteristics of a C Corp. Like I said earlier, a continuity of life. If you want to see this business continue on for potentially forever, as long as the company is still making money and still viable, you probably want to pick a C Corp. That's a good thing. If you're operating a sole proprietorship, when the business dies, or when the owner dies, the business dies, or when the owner retires and hands it off to someone else, technically the business dies and the other person creates a whole new sole proprietorship or whatever entity they choose. So C Corp has this continuity of life benefit. Centralized management, they issue stock, pay dividends, you have to follow all the corporate formalities. You want to pick officers, hold board of directors meetings, maybe in Vegas, right? Talked about that. Draft bylaws. So there's a lot of more fancy schmancy stuff here if you have a C Corp. So it's not really something you want to think about unless you're making a lot of money and you really want to set up a fancy schmancy thing. You are subject to Texas state franchise tax filings, even if you don't have to pay the tax. How do you create a C Corp? It's going to be a lot like an LLC, except for in step number 2, you're going to file what's called articles of incorporation. In Texas, they have their own name for it, but I think it's Form 201 at the Texas Secretary of State website. You're going to pay the filing fee. I think it's $300. Everything else is the same. All right. Any questions about C Corps? All right. So now we're down to the last entity, and that's S Corps. So an S Corp, it has limited liability, which is good, and it has single income tax. That's really good. It's a little bit more complicated to create than a sole proprietorship or an LLC. So other things you have to know about an S Corp, ownership is restricted. We'll talk about that. Not everybody can be an S Corp. There is a way to save on employment taxes. I'm not an expert in that area, but some people set up S Corps to save employment taxes, okay? So just be aware that that is a play, but you probably want to talk to your CPA or attorney about that. It does have continuity of life like a C Corp, centralized management, they issue stock, and they pay distributions instead of dividends. You have to follow corporate formalities, and they are subject to the Texas state franchise tax filings. Let's see where we are on time.
You've got about 50 minutes left.
How many?
35
Okay.
minutes left.
Oh, it's plenty.
Sorry.
We're doing good. Thank you, Kathy.
Sorry.
So the next thing you want to know is if you're interested in S Corp, it's not for everybody. There's all these restrictions. The first is only between 100 and 1 owners can own it, 1 to 100 owners. If you have more than 100 owners, S Corp is not for you. S Corps can only be owned by individuals, including U.S. citizens or legal residents. It can be owned by estates and certain trusts. So you cannot have an S Corp that's owned by a C Corp or another S Corp or a partnership or non-resident alien. Just be aware of these restrictions. You also have to set it up as a domestic entity, and which means it has to be incorporated here in the United States somewhere. And it can only have 1 class of stock. So these are different restrictions that you'll find on S Corps that are not true of other types of entities. How do you create an S Corp? So fun fact, earlier I said LLCs are really not viewed as an LLC in the eyes of the IRS, right? If you're an LLC, the IRS will look at your entity as either a sole proprietorship or a C Corp or an S Corp, right? An S Corp, legally speaking, is a C Corp. But for IRS purposes, they look at it like an S Corp. And the reason it's called an S Corp and a C Corp is called a C Corp does anybody know by any chance? Okay. So the reason they're called a C Corp or an S Corp is because in the Internal Revenue Code, which is an exciting document, I read it every day. It's like 4,000 pages long, literally. I have a copy here in my office here. It's incredibly boring, but it keeps me employed, so I'm happy. In the subchapter C of the Internal Revenue Code, it governs C corporations. In subchapter S of the Internal Revenue Code, it governs S corporations. So can you anybody guess what subchapter partnerships are in? Nobody? If you're thinking P,
C Corp.
yeah, if you're thinking of P, that would be reasonable for partnerships, but it's not. I don't know. The IRS is not very logical. It's subchapter K. I don't know why, but there's a test later, so make sure everybody's taking good notes, right? But anyway, little fun fact there. S Corps are called S Corps because in the Internal Revenue Code, it falls under subchapter S of the code. But really, it is just a C Corp legally. It's just that the IRS views it as an S Corp and taxes it accordingly. So you're going to have to fill out this special form 2553 to create an S Corp. All right, that's all I had on S Corps. Any other questions about any of these entities and whether they're right for you?
None
No?
coming in.
All right, good. All right, so now we're going to get to the juicy stuff, typical author income and expenses. So I love this quote. If at first you don't succeed, take the tax loss. Right. So that's what I've been doing the last couple of years. So anyway, yeah. So that's a great quote. But let's jump into it. So what kind of income can you expect if you're a author? Well, obviously, book royalties would be nice. And if you're distributing your book, like I'm self-published, so my books are distributed through like KDP, and I use Ingram Spark. I have my audio books distributed through acx.com. So I'm going to get royalty checks every month from these fine folks here as they sell my products on Amazon and other places, Barnes and Noble, et cetera. So I'm going to get a check. And by the way, for those particular sales, I don't have to worry about sales tax because Amazon is collecting that and remitting that to the state tax, sales tax authority or use tax authority. So sales and use taxes are all taken care of when I sell my books on Amazon, Barnes and Noble, and all those other sites. It's only when I get to me selling direct book sales, like I sell something in person in the back of the room, or if I have my own website, if I sell through that, that's when I'm worried about sales tax. Well, we'll get to that a little bit later. Let's just stick to income tax for this slide. And so if you have income from book sales, you're going to have to capture that. That's something you're going to have to record for your on your records. And I highly recommend keeping detailed records. And so what else? Cash prizes. So I've won some book awards for my books, and then I use that for marketing purposes. Unfortunately, none of the awards, the particular book awards I've won, came with a cash prize. I've gotten other things like social media, tweeting, and things like that, other things that help with marketing, but I haven't really won any particular cash prizes. But some book awards do offer cash prizes. You need to capture that in your book business records. And then speaking fees if you collect any of those. So that's typically what you can see. There's probably other types as well out there. Now, what about the special deduction that they allow? Now, 3 years ago, the Tax Cuts and Jobs Act came out, and it lowered the federal income tax rate from like 35% maximum to 21%, which is great. That really helped a lot of businesses. They were able to invest money that they would otherwise be spending on taxes, and they could hire more individuals to help with the business. So that was a great thing. But they also extended a helping hand to small businesses, including author businesses. So they have a 20% haircut off of the income that you earn as a small business if you meet certain criteria. So that is something that came out 3 years ago as part of the Tax Cuts and Jobs Act. And so you get to deduct 20% of your taxable income, more or less, from your small business, like your author business. And there are restrictions on that, but the main point is you do get this benefit that came out of the Tax Cuts and Jobs Act. It wasn't just for C corporations, in other words. There's restrictions on it. If you make too much money as an owner of a small business.
Just real quick, there was a question on the award. What on the income? What if the award, you said cash prizes from contests?
Yes.
What if the award was them covering a conference fee?
If you don't, well, okay. If you don't get a statement from the conference organizer showing that you have a waived, registration fee, then I wouldn't worry about it. I don't know if technically that's correct, but if they're not giving you something, chances are they're not telling the IRS either. Does that make sense?
Yep.
I don't want to give anybody bad advice, but I usually don't worry about it unless I get a record or some kind of something that says, because I've spoken at conferences. There was one I did in Dallas, and that was an expensive learning experience. I had a great time. I sold like 20 books. I gave 3 speeches that weekend, but I think I spent $700 between gas, hotel, food, and I actually had to pay $100 for the fee for to attend the conference. They didn't waive it for me. And then I made like $200 of royalties or whatever. So I lost $500 that weekend. But it was a really good learning experience. What I learned was never give out of town speeches unless they at least cover your gas price, right? But anyway, no, it was really a fun. I'm glad I went. It was a good event. I'm not complaining at all. But I learned to be more careful about where I speak and that sort of thing. So if they do waive your registration fees for the conference, technically that could be viewed by the IRS as income, but I seriously doubt, unless they get your taxpayer ID number, they're probably not telling the IRS about that. Okay. So I really wouldn't think twice about that. I would ignore that. Good question though.
I
Thank
had
you.
a couple of questions.
Sure. What you got?
Well, first of all, that spreadsheet that you had distributed a while back that gave the basic differences between the LLC and S Corp, could we have a copy of that?
Absolutely.
And then also, that was one question. And then also, if you start as like a sole proprietorship, can you later switch to an LLC or a C or an S Corp?
The short answer is yes, you can change. There may be issues, excuse me, from a sole proprietorship to something else is probably not a big deal. If you're going from a C Corp to something else, that is a big deal, because you may be liquidating the C Corporation from a tax perspective. But if you're just going from a sole proprietorship to a LLC, for example, that's treated like a sole proprietorship, that's really not a big deal. It is possible. If you're going from a sole proprietorship to a S Corporation, that's not a big deal, but you have to do a lot of paperwork because number one, you're going to create a C Corp. And then number two, you got to fill out that special form that I had on the screen where you make the C Corp treat it as a S Corp. So you still have to go through all those steps, if that makes sense.
Well, I was thinking about starting simple, like with a sole proprietorship, and then heaven forbid, if I ever got to be successful, maybe I might want to switch.
Right. And you can certainly do that. Like I said, my big caveat was if you started for some reason, which it doesn't sound like you want to do this, if you start as a C Corp, then you wanted to change, then there could be real tax ramifications depending on what's in the C Corp, because you basically have to liquidate the C Corp to go to a sole proprietorship or an LLC treated like a sole proprietorship. I should mention this while we're on this topic. LLCs have the option of being treated, like I said earlier, they're like a chameleon. They can be treated as a sole proprietorship if it's owned by one person, or an LLC can be treated like a C Corp, meaning double tax. So you have that election where you can pick one or the other. Today, I'm keeping it really simple, and I'm assuming you would pick an LLC treated like a sole proprietorship for tax purposes. And so that is what I'm talking about today. It is possible, just be aware that you can create an LLC and have it subject to all the same rules as a C Corporation, meaning it has double tax. So sometimes there are tax reasons why you do that. But that's really beyond this particular presentation today. But generally speaking, today when I'm talking about an LLC, I'm going to be assuming that you're going to treat it like a sole proprietorship for tax purposes. But did I answer your question? Okay, hopefully I did. If I didn't, ask again. Okay, so now we're talking about the special deduction you get on the Tax Cuts and Jobs Act, where basically you take a 20% haircut off your taxable income, and you're going to basically pay less income tax on the profits that you made if you have a small business like a sole proprietorship, S Corp, partnership, or an LLC. There are special rules. Again, get into this with your CPA or tax advisor. But if you make too much money and you operate a certain type of business, you may be phased out. You may be able to not be able to take advantage of this 20% haircut, if you will. So just be aware of that. So let's talk about the types of typical author expenses. Advertising. I do a lot of advertising. I use Amazon ads for a lot of my books. And for example, in December, I really doubled down because that's everyone knows there's a lot of book sales that go on in December for all different types of genres. And so for my nonfiction books, I tend to buy a lot of ads in December. And so I had a really good month last month. I think I sold my record, which is 251 books. So for a little guy like me, that's a lot of book sales in 1 month. In fact, that's my personal record. But I also bought a lot of Amazon ads. So I'm going to report those advertising expenses on my tax return, and that'll lower the income, the taxable income for that book business. Other types of expenses might be business cards, website costs. I think I spend about $150 a year on my author website, which is mikecoas.com. If you enter book awards, which I'm a big fan of, I do that with all my books. I might spend, around 50 to 80 bucks per book award contest that I enter. So I'm going to deduct those things as well. Office supplies, obviously you can deduct those, shipping costs, travel and meals. Again, all these things we're talking about here on this slide assumes you have a business, author business, right? If you have a hobby, you don't get to deduct any of this stuff on the slide for the most part, okay? So you want an author business if you want to take advantage of all these expenses. Computer, software, services like for editor, if you have a copy editor for your book, cover design, I use all those things. If you need a CPA to help you do your tax return, for example, you get to deduct a lot of this stuff. Inventory, training, if you buy books or you attend writing conferences, which I recommend, you get to deduct all that stuff. Common tax treatments. So some things are ordinary expenses and some things are capital. Ordinary is, ads. If you buy Amazon ads, office supplies, things like that, those are ordinary business expenses. And then other things are more like capital. If you're buying a computer, it lasts more than 1 year. But the good news is you can deduct expense a lot of that stuff under the rules. There's different rules out there. Startup expenses under Internal Revenue Code 195. There's a 179, which allows you to deduct other capital items up to $1 million. Or you have the alternative, what they call bonus depreciation. It's just a fancy way of saying you get to deduct a lot of this stuff. In the past, you might have had to depreciate and just take a little bit of deduction every year for a certain number of years over the useful life of that computer or whatever it is that you bought. That's a capital item. But anyway, again, travel expenses is if you're traveling for business, you're attending a writing conference, you're giving a speech there, you want to deduct your 50 cents per mile is the latest IRS. It went down, I think it was 57.5 cents a mile last year. So, and then meals, you get to deduct up to 50% of the actual cost, or you get a per diem. So just to be aware, these are different types of deductions that you get to take. Keeping records is very important. I just use a very simple Excel spreadsheet, and every month I'm going to record my income, which is my book royalty income. If I sold any books in the back of the room at a speaking event, which we don't do after COVID, it's all online. I would record all that in my records on my Excel spreadsheet. Also, all my expenses, I keep that on the spreadsheet. So as I pay bills for Amazon ads or a new box of business cards, whatever it is, I frequently enter it into my Excel spreadsheet. You can buy accounting software for this. I don't necessarily think it's that necessary, but you could buy, there's different QuickBooks or whatever, there's a bunch of different products out there. Tax forms. So any questions before we jump into the tax forms? All right, well, let's get into the sexy stuff here. I love this quote. Today, it takes more brains and effort to make out the income tax form than it does to make the income. So very true, right? So sole proprietorships and LLCs. Basically, the income that you earn from a sole proprietorship or an LLC treated like a sole proprietorship is all going to go on your individual Form 1040 that you fill out every year anyway. So if you have a day job, you drive a bus, or you're a CPA or whatever it is that you do in your day job, you're going to fill out a 1040 anyway. But now you're going to do a Schedule C. And if you do like I do, I just use TurboTax. It will put the income that you have from your business, your author business, on Schedule C if you have a sole proprietorship or LLC treated like a sole proprietorship. So you don't have to do a separate tax return for the business. That's the important point here. And it is due April 15th unless you ask for an extension. C Corps are a little more complicated. So C Corps have their own tax return, and they fill that out on Form 1120. And so, for example, I work for a C Corporation, and we have a huge tax return. In the old days, when we filled it out by hand and printed it out, I had the privilege one time of driving to the IRS office in downtown Houston, and I had this huge stack. I mean, it was I don't know, a foot deep. I'm not exaggerating at all, because we literally have 50 or 100 subsidiaries. And so we had to do an individual tax return for each sub, and it's all filed in one big giant consolidated tax return. And so I had to go drop that sucker off at the IRS office before the due date one year. Now it's all electronic, so it's pretty easy. I don't have to make that trip or whoever. So anyway, it's a separate tax return from the owner's 1040. So just be aware that it's due April 15th for a C Corp, unless you get an extension. The C Corp is in turn going to send out a Form 1099 DIV to the shareholders if they pay dividends. Okay, so the C Corp's got to do that. And then when the shareholder receives dividends and you're going to get a 1099 DIV from the C Corp, they in turn report that dividend income on their own 1040, okay, line 9A or Schedule B. So, and that's going to be part of their tax return. S Corps have a slightly different form. It's a 1120S, and it's due March 15th, not April 15th like the other tax returns. So if you have an S Corp, the due date is March 15th. Just be aware of that, unless you get an extension. S Corp sends out Form K1. If you're familiar with partnerships, it's kind of the similar form, same form, I guess. So that's for S Corps. They're going to send out a Form K1 to the owners, and then the owners will report the income, their distributions from the S Corp on their 1040 that they fill out on a Schedule E, and it's due April 15th. So any questions so far about the federal income tax return forms? All right, so next is the vendor forms. So you're going to get a W-9 from all your vendors. So let's say that you're like me, you're a self-published author. I hire my own vendors to do things like design my book cover. I also hire vendors, use a freelance editor to do my copy editing. It's one of my biggest expenses, actually. And I also pay somebody else to do my interior formatting, and they'll convert my book to ebook. So all these different folks, before I cut them a check, I will ask them to fill out a W-9 and send it to me. And the W-9 has their name and their taxpayer ID number if they're here in the US. And I'll get all that information. If you do it before you pay them, that's usually best, because once you pay them, they have really no incentive to send you the form. So I recommend that you get a W-9 from your vendors before you pay them. Okay, now if you pay the vendor over $600 a year, you have to send the vendor a 1099 MISC, miscellaneous. So you want to send them that, and it's due by January 1st of the following year. And that's unless you paid them with a debit card or PayPal or something like that. Then you don't have to worry about the 1099. But if you pay them with a check or cash, you want to send them a 1099. If you pay the vendor less than $600 a year, you don't have to send them a 1099. But it's still probably a good idea just to have it on your records. It shows that you're treating your business as a business, and it helps them because they know, hey, this guy's got a 1099, which means the IRS is going to see it. They're going to make sure that they hopefully report that income, so they won't get in trouble. All right, estimated taxes. So if you fill out your tax return, you pay income tax. Sometimes you have to pay estimated taxes, and you have to do a quarterly estimated tax to the IRS. If you have a sole proprietorship or S Corp, you're going to report it on a certain form. C Corp, they have a different form for estimated taxes, and you can pay it by mail or phone or online. This is not for everybody. Just be aware that there is estimated taxes that you have to file. But who has to file estimated taxes? Generally speaking, you have to pay estimated taxes to the IRS if both of these things happen. Number one, you owe at least $1,000 of income tax for the current tax year after withholding, and your total withholding for the year is less than either 90% of the tax owed on this year or less than 100% of the tax owed last year. So my thing is, I make sure that I withhold from my salary because I'm an employee for a C Corp. I make sure my withholding is such that they withhold at least 90% of what I owe this year or at least 100% of what I owed last year. That way I don't have to worry about this estimated tax and stuff. So that's the easy way to get out of it. Any questions about estimated taxes? Okay, so now we're talking about employment taxes. So employment taxes, if you work for a C corporation, you probably know this, that you pay half of it and the C corp pays half of it. But if you're a sole proprietorship or an LLC treated like a sole proprietorship and you earn over $400 a year of income, then you must pay the full 15.3% self-employment tax. And if you have TurboTax, this will pretty much handle it for you. It'll report it on this line 56 or Schedule SE on your 1040. All right. But again, that only applies if your author business is a sole proprietorship or LLC and you made at least $400 a year. If you didn't make that much, you don't have to worry about this requirement. Authors earning a salary from a C Corp, again, you pay half, the C Corp pays half on your salary. If you have an S Corp, the S Corp distributions are not subject to employment tax. You remember earlier, one of the benefits of setting up an S Corp is you can save on your self-employment taxes. I'm not an expert in that area, but that is a strategy some people use. But you do have to pay self-employment tax for whatever reasonable salary you earn from the S Corp. So just be aware of that. All right, now we're talking about state tax filings. Earlier I said, if you're a sole proprietorship, you don't have to worry about the Texas franchise tax report. All right, that's, again, cheap and easy, right? I'm all about cheap and easy. So if you create a sole proprietorship for your author business, you don't have to worry about this form. If you, on the other hand, create an LLC, C Corp, or an S Corp, you do have to file the annual franchise tax report with the state of Texas, the Texas Comptroller Office, and you have to do it every year. It's due May 15th. Here's the kicker. You probably don't even have to pay any franchise or margins tax in Texas unless it's, unless you earn more than $1 million or $1.1 million, okay? You probably owe zero for most people, especially authors. However, there is a penalty if you don't fill out the form. So if you're an LLC or C Corp or an S Corp, make sure you fill out the form and file it by May 15th every year. If you're sole proprietorship, you don't have to worry about it for sole proprietorship. Question?
Yeah, if you're an LLC being treated as a sole proprietorship, do you still need to fill out that form?
Still have to fill out the form. Good question. But yep, still got to fill it out. So make sure you fill it out every year by May 15th if you're an LLC, even if you're treated like a sole proprietorship for tax purposes. But legally, you're still an LLC and you have to follow the LLC rules. Good question. All right. So now we're talking about state tax, sales tax. Again, I'm not a sales tax expert. We have many smart men and women in our department that handle this stuff. But here is my basic understanding of how it works. If you want to collect sales tax and sell books in person, so you're going to go to book fairs, you're going to go to book signings, you're going to go to give speeches and sell books at the back of the room. Technically speaking, you are supposed to apply for and get a Texas sales tax permit. This is for all vendors, not just authors. And then you're going to collect, depending on the state and the local sales tax, up to 8.25% tax, sales tax on every taxable sale. So then you're going to have to remit and pay this over to the comptroller's office. Depends on how frequent your sales are and the volume. It could be once every 6 months, once a quarter, once every month. Just depends on how much sales you get. If you don't sell very much, you may only do this quarterly or maybe semi-annually, but you still have to do it. And it's due, depends on whether you have to file it monthly or quarterly or whatever. But you do have to get this permit and then fill out the forms. Now, I will tell you, technically it's not right to do this, but some authors, hint, hint, wink, wink, I won't say who, but some authors have a very low volume. They only sell a dozen or 2 dozen or 3 dozen books a year at speeches or whatever. And so they'll just do cash sales and they won't even bother with this mess. And the idea is, I'm not saying this is technically correct, but the idea is it's such a small, tiny bit of sales tax that the state is probably not going to go after him or her. Okay. Now, if you're selling 1,000 books a year, you're stupid, right? You want to make darn sure that you're recording this, you have a sales tax permit, and you're paying over the sales tax, because now you're a bigger target, right? This is something the state of Texas, they don't want to see that. But if you're only selling a handful of books a year, you know, it's up to you. It's not technically correct, but some people just do cash sales only, and they don't worry with this sales tax business. Okay, just be aware that there's 2 different ways to look at it. Sales tax exemptions. Now, if you're selling your books for resale, in other words, there's a bookstore and they want to sell your books there, they can give you a sales tax resale certificate, the bookstore will. And if they show you that, you do not have to collect sales tax if you sell your books to the bookstore. Okay. Also, if you're selling your books to a nonprofit organization, let's say there's a book club and they're a nonprofit and they've gone through the hassle of being treated as a nonprofit, you can sell your books directly to the book club. If they give you a sales tax exemption certificate, you do not collect sales tax on that sale to the book club. Does that make sense? All right. There was this interesting, because I'm a tax geek, I had obligated to put this slide together, but there was an interesting Supreme Court case came out, I don't know if it was a year and a half ago or when it was, but in the last few years. And basically, normally speaking, you have to pay sales tax wherever you have what they call nexus or a physical presence. So if I live in Texas and I sell my books at speaking events here in Texas, obviously I have a physical presence here, what they call nexus. I have to pay sales tax and collect it and pay it over to the state of Texas. I usually don't have to pay sales tax if an out-of-state buyer, finds me on the internet and I sell one book or two books or whatever to a resident in Louisiana. I don't normally have to pay sales tax, collect it, and pay it to the state of Louisiana. However, the states are getting a little more aggressive, and there was this Wayfair decision that came out recently, and they said if you have sales of at least $100,000, or this is important, you have at least 200 transactions in that state, you have nexus, meaning you have to collect sales tax and pay it over to the other state, even though you don't live there, you don't have a physical presence there. And the Supreme Court said that, yes, that is acceptable. And so now all the other states are moving in to do this if they didn't already, and they're going to lower the bar. Be aware of this, because they may say maybe it's not 200 sales in that state. Maybe if it's 100 sales, or maybe it's 50 sales, who knows? They're going to try to push the limit because they want sales tax revenue. So at some point, authors may see themselves in a situation where they have to collect sales tax for all these sales, people that bought books from them through their own author website. Not talking about Amazon here. And they sold a bunch of books to somebody in Louisiana, somebody in New Jersey, and you're collecting sales tax from all these out of states, and you got to submit it over to that state. This could be a real hassle. So this is something to be aware of. And right now, if you're not selling many books out of state, it's not a big deal, but just be aware of this. You might one day have to pay sales tax to all these other states if you sell to people over there. Kind of a scary proposition, if you ask me. All right, summary: authors should seek business treatment, not hobby, if they want to maximize their tax deductions. Authors should consider the factors, the Lent factors we talked about, to select the best entity that's right for you. Authors should report income and deductions on the appropriate IRS and state tax forms. And then again, ask your CPA or attorney for specific tax or legal advice. I will share with Kathy my spreadsheet that I had on the earlier slide so she can distribute to everyone. That I'm happy to do that afterwards. And so y'all can look out for that. Other than that, I just, open it up for questions. You guys have been a great audience and had a good participation.
Okay, I have a question.
Sure, what you got?
The Schedule C that you're talking about, the taxes LLC use tax form.
Okay.
The schedules. How difficult is that? How does one find that, and how difficult is it to fill out?
So the Schedule C for the 1040, are you talking about the 1040?
Correct. No. Oh, well, maybe I am. But the question I had was the one that has to be put in on May the 15th.
Okay, the state franchise tax?
That's it.
Okay. If you go to the Texas Comptroller, just Google Texas Comptroller of Public Accounts, or you can Google Texas State Franchise Tax or Texas Margins Tax, either one of those. You'll find all the requirements on, there is a form you got to fill out and submit it to the Texas Comptroller. It's on their website. I've never done it personally because I have a sole proprietorship for my business, but it should be easy to find. If you can't find it for some reason, you can always email me and I'll be glad to look for it. But I've seen it before. It's not hard, it should not be hard to find.
I'm not worried about how hard to find it is, how hard to fill it out is.
Oh, right. It shouldn't be. I've never filled one out personally, but I would imagine it's not too complicated. It probably has basic information about you and your business and the number of sales and that sort of thing. Your revenue shouldn't be too bad.
You're getting kudos from the audience here. They're thanking you very much. Millie Hast is thanking you very much. Great information. Suzanne Stavanoa, a big help. So you're awesome.
Oh, great. Glad to hear that. Glad to help.
Anybody else?
So just as I'll throw this out there. I give a lot of speeches on how to self-publish books. And I do that all, to a lot of writers groups. If people have any questions about self-publishing, they can email me, or book sales. I have another book about book selling and book marketing, and I give a lot of speeches on that. If people have questions about that, I'm always free to help. I don't know everything, but I'm certainly open, and I like to share information with other authors, what works for my books. And I sometimes give speeches on copyright issues, this tax stuff. So I do a number of different speeches. I like to help people. That's why I love to teach. I feel like I have a heart of a teacher, as they say. So please don't be shy. If people have questions, you can always email me. I think, I don't know if my email, it's mike.coas.esq@gmail.com. But anyway, I just want to throw that out there. If anybody has any follow-up questions, don't be shy.
Yeah. So you're not sure if it's on this outline that you've got here?
It might. Oh, it should be. Did I give you the one pager outline, or are you talking about the slides?
I'm talking about the slides.
Oh, okay.
But
Yeah, I'm not sure if it's on this thing or not. I'll make sure it is when I send them to you. How about that?
that would be awesome.
Yep.
Thank you. Thank you. Thank you. Another thank you from great information. And this is from Fran, and it would be terrific to have your presentation on paper. And we just talked about that. So that's awesome.
Yep.
Everyone, thank you so much for joining us. Mike, this was phenomenal. How much stuff do you have in your head?
Oh gosh. Yeah. Well, I'm glad to help others. I know this is complicated stuff, and frankly, some of it's boring, but it's important. And I think the more authors know that they need to treat their writing and their business as a business, it's beneficial, right? So they can maximize their deductions and so forth. So hopefully they can, write more books in the future. They don't go bankrupt on book number one. So
I'll tell you what, if you're going to add a couple of things like your contact information on the slideshow, could you also add the titles of your books?
sure.
So that we might be able to look those up on Amazon. I'm really interested in the self-publishing one you were talking about.
Yeah, absolutely. Yeah, it's called 14 Steps to Self-Publishing a Book. And this is my best-selling book. I've sold 2,200 copies, believe it or not. That's phenomenal. I've never dreamed I'd sell that many. So, but yeah, I'll be glad to put the titles, and I'll put my my contact information on my email. Be happy to do that, and I'll send you the slides today, and you can share that with your folks. That'd be awesome.
Thank you so much. Everybody, wasn't he just awesome? Thank you.
Thank you so much.
You're welcome. Thank you all for having me. Really enjoyed it.
Take care, Mike, and don't have a safe trip back to Houston, okay? Don't get taken off the road with any ice slicks or anything.
All right. Happy New Year, everybody.
Happy New Year. You are on.
We have a board meeting on Friday.
Ooh, yes. Yes, we do, Dave. I will send out a Evite. I've been a little bit under the weather this